Great, thank you very much.
Okay, thanks a lot.
John, Angela Merkel is looking for further integration of the Eurozone. There's a massive crisis. Do you think that's a smart idea?
Well, I don't myself prefer that as an alternative, but I think the European Union is now down to corner solutions, either the Chancellor's version of a much more integrated Europe or the other corner is the breakup of the Eurozone. I think the latter is more likely, and in fact, in the case of Greece, I think is actually to their benefit to get out of the Euro. But that's something the Europeans are going to have to work out. I think they ought to work it out on their own without support from the United States.
Now, if they go back to national currencies, if Greece leaves the Eurozone, won't that be a massive crisis? What does that mean for the financial markets?
Well, I think like everything else, there are difficulties that it would pose, but that doesn't mean that we should support the euro simply because it exists. They're the ones that created this. They had primarily political objectives when they did so. That objective is now in the process of failing, and I think they're going to have to bear the consequences of it. I'm not saying that because I'm not concerned about the Europeans, but because it was their project, and they should take responsibility for it. That's what democratically elected governments do.
Thanks. Before we get started, please check out our sponsor, Lear Capital. That's Lear Capital, the precious metals leader. Buy gold, buy silver, do it today. Hey everybody, I'm Christopher Greene. You're tuning into AMTV Alternative Media Television. It is Monday, March 16, 2015, and the Federal Reserve will be releasing new information this week on Wednesday on whether or not Janet Yellen will be raising interest rates. Of course, rates haven't budged since the 2008-2009 collapse. Since then, the U.S. stock market has tripled. These new bubbles have been a-brewing. And we're to see if there's any more or new linguistic gymnastics. This is what Mohammed El-Arian said earlier this morning. Coming from the Fed, will they keep the word patience or will they remove the word patience? A lot of this has to do with the strengthening of the U.S. dollar. We've had a very strong dollar rally in recent weeks. In fact, it's been the most aggressive rally in the shortest period of time that we've seen in almost half a century, in 40 years. While at the same time, the Federal Reserve has been keeping interest rates at zero and is soon about, we think, maybe, but not really sure if they're patient or not, going to bump interest rates, maybe 25 bips or 50 bips. The Euro has launched their own version of quantitative easing in the European Union. So we've had the euro weakening and we've had the dollar rising, reaching a parity. Traders think, and we're pretty much already at parity, that the euro could even move below, depreciate against the US dollar. So what does this all mean? What do you need to know about the strengthening dollar rally? And how has this played an effect in our economy and in global capital markets? Well, with a stronger dollar and the dollar appreciating in value, this has put pressure on commodities. It's one of the reasons oil has dropped. It's one of the reasons gold has dropped, which I personally see as a buying opportunity. The more the dollar rallies, the more the dollar continues to appreciate with these Federal Reserve shenanigans at the Federal Reserve with interest rates at zero, the more of an impact it's going to have on commodities, whether or not it's gold, whether or not it's oil or wheat or corn or anything else for that matter. You see, the Fed's going to have to put on the brakes at some point. They're going to have to begin to start to move interest rates. Otherwise, oil will continue to crash. Goldman Sachs might be right. We might see $30 in oil, which would be catastrophic for the U.S. economy and the global economy at large. Also, Vladimir Putin reappeared on Monday, today, laughed off his 10-day absence. Still has yet to explain why he was missing, gone MIA, kind of like Carmen Sandiego, for over 10 days. For those of you who think that's normal, it's not for a world leader with nuclear capability to go missing for 10 freaking days. Could you imagine if the President of the United States, Barack Obama, went missing for 10 days? You think people would want to know whether or not he was still alive or maybe potentially planning some kind of global event? Also, what's interesting is Putin is showing his force in Russia today, on Monday, with war exercises occurring right now, some 40,000 troops. He's putting his submarines on display. So all of this very interesting. All of this, of course, playing in to the U.S. dollar. The United States federal government in cahoots, our politicians here at the White House in the United States that represent the corporate interests in cahoots with other countries like Saudi Arabia to drive oil prices lower. In fact, I would argue the Federal Reserve has been behind the dollar rally. They've been behind this dollar strengthening to put pressure on oil prices, again, to affect countries like Mother Russia or Iran in this nuclear deal that Mr. Bolton called I'm paraphrasing a bit, but a total give up and a give in to the Iranian regime. All of a sudden we're negotiating with them. At the same time, King Bibi, Benjamin Netanyahu, is fighting for his life on Tuesday's election, says he could lose. It could be the end of an era, the end of King Bibi's reign. A lot of people pissed off of his speech that he gave to Congress just about a week ago with Iran, using a lot of biblical references, speaking to Iran's nuclear program, going and providing a counterpoint and going directly against and opposing the Obama administration. So again, I would watch the dollar. I would very much watch what the Federal Reserve has to say on Wednesday. How will they react? Are they going to do anything? Do they drop the word patient? Do they keep it? Are they going to raise rates? If they don't raise rates, expect the dollar to continue to rise, expect the euro to continue to depreciate, expect commodities like oil to continue to get whacked, all commodities for that matter, and expect it to have severe repercussions economically, domestically, internationally. Again, all this has to do with the East moving away from the dollar, the West wanting to preserve it, Russia setting up counterpoints to the World Bank and the IMF through the Eurasian Union, their version of the West's World Bank or IMF. All of this has to do with controlling that petrodollar trade, which, keep in mind, oil is priced in dollars. So very significant to watch these economic indicators moving forward this week. I, of course, will keep you updated. My name is Christopher Greene, hard-hitting and in your face as usual. Please support our sponsor and click the link below.